Welcome to the carry trade example. My name is Donjo Franklin, and I am with Franklin Global Capital. And today we are going to talk about a popular strategy utilized in Forex, um, the carry trade. So what I'm going to do is I'm going to bring up a very popular example of how to use the Franklin Forex indicator set to improve your statistical trading odds when utilizing this method of profiting from interest rate differences between currencies. What we have plotted is one of my favorite carry trade currency pairs right now, and that is the Aussie um, New Zealand dollar pair. And the reason why I like that pair is simply because those two currency pairs have the highest interest rate right now. Currently, the Australian dollar is going for 4.45% in interest, and the New Zealand dollar is going for about 2.9% in interest. And ideally, you know, you can capture the interest rate difference between these two pairs, and utilizing the forex indicators. The Franklin Forex indicators, you can be on the right side of this trade statistically to not only profit and increase your chances of profiting from the interest rate spread, but also from appreciation in the actual currency price just being in a long position. Um, so what we have plotted here is actually a daily chart, which um, is illustrated using a 1,440 minute chart, which is equivalent to 1 day. Um, and we are currently showing what is happening in the market as of March 10th, 2011. The first example of this carry trade occurred right around November 22nd, and typically we like to see, the purple line cross below this lower band, but each one of these bands represents a statistical significance. And looking at the strength gauge, because the strength gauge started to edge higher and it crossed a statistical band, we could have taken this long carry trade right here, which would have gone for about 600 pips. And then we'd have gotten out of this trade about a month later, and then we could have taken the market downside correction. But when you take these type of trades, you end up paying interest. But based on this correction, the amount of pips accumulated would have made up for the interest paid per day. The second opportunity for a pure carry trade would have been to go long um, around probably February 4th, right here, and you could have stayed in this carry trade for about a month or so, and it would have ended a few days ago, actually, around March 7th, and that trade went for about 900 pips, depending on where you actually entered. Um, so, here was an example of being able to statistically trade markets utilizing the carry trade strategy and the Franklin Forex indicators. A lot of traders like to trade, against lower funding pairs, but I think this presents the best opportunity.